Good afternoon, everyone. Welcome to GTBharat's Decoding the Union Budget session on consumer e-commerce and retail sector. I'm Naveen Malpani, partner with the firm and responsible for the consumer retail and e-commerce sector within the firm. Uh, I'm being supported on this panel by a battery of experts from multiple domains. And I'll just take a quick minute to introduce my panelists for the session. We have Sandeep Batra, who is CFO of Crompton Consumer. Sandeep, a chartered accountant, a company secretary by profession, and has been in the consumer and retail space for more than 30 years. He's an avid golfer as well, and would be helping us to undecode the budget from a consumer durables perspective. I have also on the call Aditya Gupta, who is the tax head for Reckitt Benckiser. Aditya again is a champion in direct tax and indirect tax aspects, and is looking forward to the entire South Asia tax compliances at Reckitt Benckiser. A chartered accountant by profession as well as a lawyer by profession, and he is a regular speaker on multiple forums as well. From GT, we have Kishan Arora as well. Kishan, again, a chartered accountant by profession and has been a veteran in the indirect tax space. Kishan is also leading our indirect tax practice and will be helping us to decode the entire details from a customs and GST perspective. Also, we have with us Mr. Mehta. Mr. Mehta is a CBO and a CFO of DealShare. Just to let you know, guys, it's the fifth unicorn in India for this year, and they have just closed a good $165 million funding with multiple private equities. Mr. Mehta comes with a very diverse background of e-commerce sector, and obviously it will help us to decode the budget from an e-commerce perspective in terms of what's good, what's bad for the sector. With this, I'll just start off to just give a quick introduction. So if you look at the budget, a pretty healthy budget. Nothing would be there from an individual taxation perspective, but a lot of investments in the infrastructure perspective. Also with the new thing coming up with the tax on virtual digital asset, that's definitely going to shape a new tax regime as well. If you look at from an overall sector perspective, a lot of investment is being proposed by the government in the logistics space. If you look at data, on an average, India's logistics cost is about 14% of the GDP as compared to 8% globally. That's where all the infrastructure investment in Gati Shakti will definitely help the sector in terms of getting more efficient, more competitive as well. Though from a long-term perspective, but yes, all the initiatives taken from development of roads, development of railways will definitely help to reduce the transit time which the sector faces. Also, if you look at if I look at it from a FMCG perspective, nearly 40% of FMCG's market share is in rural India. A lot of initiatives being taken by the government in terms of transferring the MSPs directly to the farmers' account. This will definitely help in improving the disposable income at their end, and in turn would be beneficial for the sector as well. If I look at it from a food and beverage sector, the sector had the massive impact of the pandemic, and they are still reeling under a lot of pressure. The government has definitely extended the ECLGS scheme and have earmarked 50,000 crore for the sector. It would definitely help the sector to get back to its pace, but it will still take some time for the things to get regularized on the ground as well. A very favorable budget from an MSME perspective, and that's a sector that's critical for the growth of the country as well. Nearly 29% of India's GDP comes from the MSME, so all the efforts being made to help the MSME is a very welcome move. As per one of the latest survey that GTBharat had conducted, there was always a challenge on the skilling part of MSME, and if you see, government has taken a lot of initiatives to improve the skilling parts as well, with specific courses being designed to help the MSME get more competitive from an overall global perspective as well. If we look at the BharatNet, a big chunk of investment being made under the PPP model to improve the net connectivity at the ground level in the rural areas. If you look at our shipments of incoming shipments of smartphones, there has been 11% year-on-year increase on that front. And that is where a very favorable infrastructure has got created for the growth of e-commerce sector. The rural population is vying towards getting more accustomed to the e-commerce purchases, and with the right infrastructure, that will sector will definitely see a growth on an overall basis. So we were just quickly summarizing the details from a overall sector perspective. And with this, I'll just start off, with our concerns and questions. So Kishan, I'll start with you. There have been a lot of changes being proposed in the custom rates and related exemptions. According to you, which sectors would be, from a consumer and retail perspective, would get impacted from a Customs Act perspective?
Thanks, Naveen. Numerous amendments have been proposed on the custom front. The government has proposed to gradually phase out concessional rates in capital goods, the project import scheme, which has, where the import duty has been now, imposed at about 7.5%. Since the past, two budgets, many exemptions related to customs duty have been also withdrawn, which were either redundant or the need for the exemption was no more there, considering the domestic manufacturing capability increase of these products. And this sector has also had similar experiences. And the duty rationalization, and other reforms which have been proposed in the customs laws will assist the domestic capability creation, make in India, in the Atmanirbhar Bharat vision, and they will also enhance, the ease of doing business and act as an enabler for other policy initiatives such as PLI and phased manufacturing plan. Now, this year also, as we saw, the FM announced about 350 customs exemptions being taken out, and this was primarily due to the fact that sufficient domestic capacity existed for the same. And these included exemption on certain agricultural produce, gems, jewelry sector, stones, chemicals, fibers, electronics. All these sectors have these exemptions over a period of time, which actually now the FM believed and the government believed are no more required. So if you talk about electronic sector for that matter, the custom duty rates are being calibrated to provide a graded rate structure to facilitate domestic manufacturing of, say, wearable devices, hearable devices, electronic smart meters. So there's a phased manner of calibration which is being done. The concessions are also being given to mobile phones sector, so the transfer of transformers of mobile phone chargers, camera lenses of mobile for camera. So say for camera lenses, which are used in camera modules for cellular mobile phones, the custom duty actually has been reduced, which tends to mean that there is a need for this import to happen at a lower rate so that the overall competitiveness of this products of the mobile phones in India is capable of being manufactured at a better price, which also has an export capability. Now, it also means that these products are not available in abundance in India as of now. So, if you talk about parts which are used for transformers or chargers, adapters, etc., the duty reductions again happen from 10-15% to 5%. At the same time, to also look at the Make in India initiative, there are upward duty revisions happening in the sector where the duty has gone up for, let's say, electronic toys from 15 to 25%. Now, this tends to show typically the trend which has been followed is that only import critical raw material and what is not available in abundance in India, and try to make everything possible as a Make in India, and try to make those Indian global players shine by having a competitive price wherever the duty rates were higher, on the raw material, reduce them and have India manufacture those and supply them. Now, the phased manufacturing plan was actually all about that. So if I take an example of, say, batteries which are for smartwatches, okay, the basic custom duty has been reduced from 15% to nil in 2022-23. But there is a phased increase which has been proposed under the phased manufacturing plan to increase the rate to 5% in 23-24, 10% in 24-25, and 15% finally in 25-26. Now, if you talk about jewelry sector, again, reduction of custom duty on cut and polished diamonds had been witnessed, and that has been made to 5%. And if you look at sawn diamond, there is a nil custom duty which has been there because that is not available in India. Now, typically, if we talk about exports, textile sector, now duty exemptions on many products, embellishments, trimming, fasteners, buttons, zippers, lining materials, leather, other products like furniture fittings, package boxes, etc. All of these needed by bona fide exporters of handicraft, textile, leather garments, etc., leather footwear have been done. So, but if we talk about basic custom duty on commonly used products like pile fabrics, which was 25%, or 100 kg per kg, whichever is higher, in the pre-budget. However, this has been increased to 20% post-budget. And similarly, in fact, in other ready-made garments like overcoats, etc., again the duty has been increased. So there is a mixed bag of changes which have happened in the duty rationalization across sectors. I'll also take an example of, say, food processing for that matter. Now, products like cocoa beans, basic custom duty has been reduced from 30% to 15%. Now, this is actually to encourage the competitive domestic manufacturing of these products because there is a capability of exporting them. So pushing that fact on products like coffee, chocolate, etc., this forms a raw material for them. So ultimately, the duty was reduced considering the fact that it was required. So similar changes have happened across other sectors and furniture and paper, wood articles, etc., where differently the government has looked at the fact that where is the consumer pattern. If you are looking at these sectors from an export market perspective and looking at the PLI schemes which have come for food processing, etc., there is a thrust of import at a lower rate only for critical raw materials. On the other side, wherever the capability is already now available in India, try to discourage people from importing the finished products and rather focus on raw material imports and add to the overall GDP by manufacturing in India. So this is basically the overall nutshell of the duty changes and the thought behind the duty changes. So I believe that the gradual doing away with exemption entries in these sectors where domestic manufacturing capacity has reached a minimum threshold is a very welcome move. Most of the duty rate changes which I've talked about appear to have been introduced to boost the domestic manufacturing and make in India and make the India manufacturing hub shine across the globe.
Sure, thanks, Ian. So I think the focus is very clear: Atmanirbhar Bharat and be more export competitive.
Absolutely.
Before I move to Aditya, just one question is in terms of what, according to you, would be the key hits and misses from a consumer and retail sector perspective.
So if you talk about hits and misses, I think majorly the theme of this budget was primarily, like we had talked about, rationalization of duty structures was more on Make in India. So Make in India was one of the biggest themes of this budget, at least if I look at the indirect taxation per se, and for the sector as well. Also, if you look at, other initiatives which have happened in terms of reductions of, various spare parts, etc., where Digital India initiatives are being encouraged. The rejigs have happened critically for the impetus of growth in this sector. If I talk about others, there are large facilitation announcements which have been a major ask, including consumer retail sector space, because many of these players are having their businesses and registrations across pan India, and many of the times there is a huge cash flow issue in the GST where you may be having taxes or GST credits lying as a balance available in abundance in one location, but it's not available in the other location as much at that point of time. And this trend actually has been very uncertain in the last 2 years, considering the pandemic situation and the demand supply mix, which has been very uncertain and unpredictable across India. So what has happened is basically that for facilitating this ease of doing business and also to encourage smooth cash flows for businesses, the government has actually allowed a very good feature of transferring the GST cash balances from one GSTN to another GSTN of the central GST and the IGST. Now, I think this is a very, very appreciated move which has happened, and especially for this sector, if I take that example, because of the kind of distribution and the supply chain which is carried along pan India for retail spaces and the consumer spaces, this will be a very big boost in terms of allowing the fungibility of working capital by moving the money wherever required to pay the taxes. Now, there was a huge ask for from the sector also on the input credit relaxations for that matter. While we did not see many of the claims of input credit clarifications to come what qualifies as personal consumption, especially in the COVID times, a lot of expenditure has happened on CSR as well as on COVID. But I was hoping that there will be some announcements in relation to that, but that didn't happen. But obviously, the GST Council takes those decisions, so that can probably happen in a later stage. But the time limit to utilize that exemption has also now been extended by 2 months. It used to be 30th September. It has gone to November, which also means that the businesses can actually take more time to plan and also look at all the reviews and reconciliation of their tax credits. and there's more time given, because this timeline, actually, you would be aware that it also clashes with other timelines of return filing for income tax, transfer pricing, as well as audit closures. So this also gives them a breather to actually look at and focus on optimizing their credit structure, which ultimately will not be a loss to them, and that timing has been now extended. Credit notes, also had to be issued, and final adjustments for a financial year also were timed to be 30th September. They have also now been extended by 2 months, which means, and especially in e-commerce space, retail space, where there's a large amount of returns which come, the credit note issuance was a big problem for businesses to manage. And now with this, this extension of 2 months again will give them that breather to plan this activity for the year, but by giving them additional time to actually adjust their taxes so that it does not end up in a result in a loss if that deadline is not met as of 30th September. So I think the facilitation measures which have happened under GST, the rationalization of taxes which have happened under duties which have happened under customs are the theme of probably the positive intent of the government for the sector. Even if we talk about some sectors like e-commerce, which you talked about, I think it's forming the backbone of the industry. But if you look at how the supplies will be structured in the e-commerce, there is a large compliance which is there for the sector. The e-commerce is still grappling with multiple issues around managing TCS compliance, managing their registrations across India, because they have to register in every state, where they are operating, where the vendors are operating from. There was a ask, and there was a thought process that can that be now calibrated to kind of have e-commerce players pay or do the TCS compliance only in maybe one state and on a central basis. Probably that does not gel in with the theme of the GST, because it has to be looked at from a state perspective as well. So that did not happen, but I would have been happy if I saw some thought process or a roadmap to really look at simplifying the regime for the e-commerce players as well. Now, I've talked about GST rate rationalization has been a big area to talk about, and consumer and retail sector was also expecting a lot of debate was going on whether the rates of 12%, 18%, and 28%, where this sector looks at a lot of products being parked. Now, the FM also knew that the RNR rate, which was initially put in, was 15%, but it actually went down about 11.5% is what the FM mentioned as a slippage over a period of time by passing benefits across sectors. But if this sector is to be looked at, I think rate rationalization probably would have seen some positive for the industry if there would have been some mention around that. While the GST Council is looking at rate rationalization as a measure, and it is something which will come up in the near future from the GST Council meetings, but some roadmap on that would have been a welcome step to at least mention that what could businesses plan where the product rates can be calibrated to, say, merging 12% and 18% slab to make it about 14 to 15% closer to the RNR. I think these are the things which probably I thought could have added a big boost in terms of the thought process, the alignment, because this budget was very forward-looking. It was looking at the growth per se, boosting consumption, and these measures would have been apt, or the roadmap at least would have been apt for businesses to plan better for the current time as the future for probably in the sector.
Sure. Thanks, Vishan. I'll just move to Aditya. Aditya, if you want to just update what would be the key direct tax amendments from a consumer, retail, and e-commerce perspective, which can impact the sector. And also, before you start, for the participants on the call, if there are any questions, feel free to add on the Q&A tab. We'll try and address as many of them, as we proceed in the discussion. Over to you, Aditya.
Yeah. Thank you so much, Naveen. I think before I delve into the amendments which have been brought, I think some thoughts that we had pre-budget, the recommendations that were floated around in terms of what are the expectations, particularly for this sector. I think there have been a lot of articles from the FMCG companies around a few weeks ago, and they were more focusing on the expansion of rural sector. Because ultimately what was happening is that even though government had been doing MSPs and transferring the money, but I think the rural sector and the growth which was supposed to come from rural sector was not coming. I think there was some need at this point of time to ensure that more money is in the hands of the rural population so that the consumption can be given a big push. Having said that, I think the measures which have been introduced, as Krishna also mentioned, they have been more long-term, pragmatic, in terms of laying the structural reforms, which will going to boost the economy on a long-term basis. So this was one thing, and I think it is also reflected in the form of the rationalization of the custom duty rates, which also shows that the government's push has been to make India an Atmanirbhar Bharat and promote the domestic manufacturing. Having said that, I think it was also coupled with the fact of PLI incentives, which they have been introducing throughout the year. They have not waited for the budget, rather they have been introducing it throughout the year through various sectors like white goods sector and all those things. So I think there has been a constant push by the government in laying the foundation for the structural reforms. And I think that the way the speech was given by FM was also showing that there's a clarity of thought in the mind of the government in terms of the directional and also what they want to do. The other thing which was also noticeable is that we did not have much changes in the budget, which upsets a few things. The changes have been more like certain tweaks, certain small changes. This shows the stable regime by the government, that they feel that the economy is in stable this thing after COVID. They did not want to bring too much of changes as well. So I think that has been more like the thought process which we felt that the government has when they presented the budget. I think it was also and I think it was also forward looking, because the PLI scheme for 5G as well as drone Kal, which they mentioned, also shows that the government is looking at more setting up R&D centers as well as embracing the new technologies which are going to put India in the forefront. So I think overall, and that is why that was also reflecting in the share market yesterday. They gave a thumbs up to the entire budget that was given by the FM. Now, having said that, if I look at the direct tax proposals, I think the proposals have been more in the nature of as I mentioned, about tweaking certain places wherein certain sections were to be amended in the form of certain procedural lapses which were there, they were corrected. Certain administrative gaps were filled in. So if I have to really talk about, I think one of the standing demands of the industry was that since the government is giving a 15% lower tax off rate to new manufacturing companies, so the period was expiring in 2023, and that has been aptly extended by a year to give the boost to allow more manufacturing companies to avail the lower rate of tax. I think that was one welcome move. And obviously on the voluntary compliance. So what they're saying is that in case you want to put in which government is actually terming it as which is going to help in closing the litigation, is about that voluntary compliance of filing the return. And since it's a provision which the government has introduced, they've clearly said that in case you have to offer more income to tax and you realize at later point of time, and they have given a 2 years window for that. So they're saying that by paying an additional sum of say 25% if you disclose within 12 months and 50% if you disclose within 24 months over the existing tax and interest. I think this is also something which is welcome. The other move which is also welcome is about the dependency of appeals. So I think there has been a long-standing demand by the courts, not by the taxpayers, but by the courts, that you have to reduce dependency. So what government has done is that in case there is a question of law which is pending before a high court, before a jurisdictional high court, or there's a question of law which is pending in Supreme Court, and the taxpayer agrees that the facts are similar to that case which is pending, not in his case, but in some other taxpayer's case, then in that case, the government may prefer not to file an appeal. And then they say that in that case, the decision, whatever comes in that taxpayers, can be aptly applied. I think this is also this also is quite a mature move. For the very simple reason, I think there have been few backlashes by the courts on delays by the government in even filing the appeal. So I think this point also gets addressed by this move. Then I think the faceless assessment which the government introduced, and which is an ambitious project by the government, and which has been which the government has been promulgating for quite some time now. also talked about that because government wants to end the corruption in the income tax department, and they introduced this faceless assessment. Obviously, there had been huge challenges. There had been stinkers from the court about giving time to CBDT, that you put your house in order. We are giving you 90 days time and all those things. So what government is doing is that at least for certain assessments and certain matters, they are saying that if a transfer pricing officer has to pass an order, or the DRP, which is a dispute resolution mechanism, has to pass the order, and the timeline was finishing, so they have extended by 2 years. Tribunal, personally, I was never convinced that for a tribunal you should have a faceless assessment, because it's a civil court. And I think that is what they have mentioned this time, that it's a civil court, and the period has also been extended by 2 years now. Certain minor issues on who is a proper officer, like for DRI, they have said whether DRI is a proper officer, wherein the Supreme Court had ruled in favor of taxpayers. What we also found is that there are a couple of rulings which they have reversed this time. So one of the standing issue was also on whether cess can be claimed as a deduction by the taxpayers. So government, while clarifying rather, they have said that the cess is not cess cannot be claimed as a deduction. Rather, it is a form of a tax or an additional tax, which should be disallowed. There had been rulings, counter rulings. Few of the high courts had ruled in favor of taxpayers, and then there have been tribunals who had ruled otherwise, and also in favor of taxpayers. So I think that controversy has also been put to rest. I think one of the most important amendment which they have done, and which is a point of deliberation, which has already been a point of deliberation now since the moment it was introduced, is about the withholding tax on the benefits and perks that are given to the persons who carry on the business and profession. Now, TDS has been introduced when you make payments on such payments. And this is a personal view. We have always understood the meaning of TDS as tax deduction at source. But I think for a couple of years, it has been TDS deduction at source, TEDIOUS, which is a more painstaking task. Because in 2020, the government introduced in the middle of the pandemic, when they moved to e-invoicing, they also made certain changes on the TDS front. Then the TDS amendments were also made effective from 1st of July 2021, and this is the third year in a row wherein they have again introduced the TDS part. So compliance part we'll talk separate, but I think it is important for us as an industry, and I think it's going to impact not only the FMCG, but I think all the industries who are giving the benefits or discounts. Whether I don't know whether I should call it a discount, but freebies to their distributors, sub-distributors, and in that case, government is saying that when you are paying that, you have to deduct 10% as tax. Now, interestingly, this time the memorandum which comes with the budget booklet has been extensively drafted. It has been like a Big Four making a submission to the tax authorities why a claim should be allowed, and department countering it why a claim should not be allowed in few pages. So whenever they have made an amendment, they have tried to explain it, and this shows that the government is quite clear why they are making an amendment, and this also helps in reducing the litigation. So when they have introduced this TDS provision, they have simply said that those people who were getting these benefits in the form of freebies, they were showing inaccurate particulars in their return, and therefore they want to correct it because they were not disclosing that as an income in their books, and therefore the obligation has been cast on the companies or the people who are responsible to pay those benefits to deduct 10%. Now, it's a 4-line or 5-line amendment which they have brought, but look at the things it has brought, or the storm which it has brought, is that all the companies in India, whether you talk about the white goods, FMCG, car manufacturers, they do give schemes and they do give freebies to their people or the distributors, even on attaining some targets, and that is how they promote the sales. Now, those things which were earlier in government view were getting untaxed will now be brought to tax through this amendment. Though they have put an obligation of 10% on the companies to deduct tax at 10%, But look at from a distributor or sub-distributor point of view, it eventually gets taxed at 30%, because 10% will be reflected in his 26AS as 10% TDS. And when he computes his total liability, the market value of that freebie will be computed and he has to pay 20% tax. So effectively, the scheme or the benefit or whatever you paid him for 100 rupees will eventually reach to him at 70%, 70 value. First point. The second point is when it is also going to upset the budgets which the companies put at the beginning of the year in terms of what is the amount that they're going to put for the schemes, what is the amount they're going to put for this thing. So I think a 30% increase of that, because I don't think so the distributors would be easily digesting it. They would come back, they would say that the companies will either have to pick that 30% cost, or the companies will have to find ways and means to ensure that even the compliance is done, but the distributors are also kept happy. I think this is one of the play area, or this is one of the points of discussion which will happen, because I did have one of the discussions with my sales director in the morning, and instead of me discussing the amendment, he was discussing the amendment with me. That I have got 4 calls since last evening from my top distributors, and they are saying, what do we have to do now? And so I think this is something which as a company, as a multinational, obviously we have to ensure that we are fully compliant and we are following the law, but also we have to manage the business expectations. Obviously there are some nitty-gritties around it. That one of the nitty-gritty is that suppose you are not distributing yourself, but you have put a distributor, and distributor floats that scheme on your behalf to the sub distributors who have attained that target, because obviously your sales don't happen at your distributor level, they happen at your sub DB level as well. So how the withholding tax provisions have to be met? When you make the payment to distributor, then you have to withhold tax, or when the distributor makes payment to the sub distributor, then he has to withhold tax. At what rate he has to withhold tax? What is your relationship with the distributor? Is it an agent? It's a principal. So I think all those questions will have started already cropping up in terms of how we have to perceive this amendment. And I think it is going to keep all of us busy at least for some time. And I would really urge and make representation through our forums for the government to bring out certain clarifications, FAQs on this in terms of what is the real intent behind introducing this provision first. The second is that we really want to contribute and make sure that the companies are on the right side of the law, but we also have to ensure that there is no business hassles. TDS is really understood in the form of tax deduction at source and not TDS deduction at source. I think that is what we should be eyeing at. So I think these are a couple of points from my side from a direct tax point of view. There is no specific as such amendment which would impact a particular sector, because all these are, as we talked about, these sections or the amendments have been more of administrative reforms, administrative changes. They would impact all the taxpayers equally. One of the welcome moves is definitely on the reduction of surcharge on the capital gains, which I think government has done a good job there, because there was some disparity between the unlisted and the listed shares. So that is also which has been quite favorably accepted by people. But one of the misses is definitely nothing on. So somebody was telling me no news is good news on personal tax front, which I did not like at all, because we were really looking at some news on personal tax front in some form or the other in terms of some tax reduction or some income in the hands of the salaried class as well. So that's all from my side, Naveen.
Thanks, Aditya. Coming to you, Sandeep, the introduction of TDS, especially in the kind schemes, obviously is going to impact the industry as a whole. Just wanted to have your views from a business perspective, as well as, how do you think it will impact the sector way forward as well?
So this is something, but first of all, I think thanks to Grant Thornton for having me, and I think to all the panelists who spoke before me. They are certainly much more learned than I am about the budget. On this specific point, I think Aditya explained it very well, some of the challenges. And at least in my experience, this has been a favorite point in income tax assessments. It may have happened in different forms or the other, but every income tax assessment, they will ask for sales promotion details. And when you say that either you took your dealers on a foreign trip or you give them gifts in kind, the preferred mode being gold. Now, of course, Amazon vouchers or some vouchers. So they would arbitrarily disallow. There was no logic. How much will they evidence? And they would say there is no causality. There is no what is the relationship that you have with the beneficiary, and arbitrarily some 20-30% would get disallowed. And I have seen it take other sorry, shapes and forms. So far, the headache has only been with the company. You disallow some income, company goes in appeal, and in some form or the other, some forum, it gets settled. Now, what I think, the way the law has been drafted is that the company is now obliged to deduct tax. I think that raises not one, hundreds of procedural questions, right? Uh, how do you determine the value on which you rate the tax? Because most often and then not, companies don't communicate a value to the retailer or channel partner. I run a scheme saying, if you achieve X value of sales, I will give you a car, I'll give you a television. I have not told him that it is a car worth 10 lakhs or 5 lakhs or 2 lakhs, right? So valuation will become a big bugbear. On what value do you deduct tax? The second issue will be that we have no business dealings with many of these guys. I mean, a lot of companies, what they do is they run schemes via distributors with whom they have business relationship, but they also run schemes with retailers with whom they don't have a direct business relationship. But thanks to technology, you are able to see the full chain, what you are selling to distributor, what distributor is selling to retailer. So basis that data, you are able to settle it with the retailer. Now, on whom, as Aditya said, on whom will you deduct the TDS? You are not settling anything to the distributor. If the gift is in kind, you are giving it straight to the retailer. Will this, so now this TDS coming in, will it now mean that the retailer will say, sir, give me cash. I don't want anything in kind. Convert everything to cash. Instead of giving me car, give me 2 lakhs. Instead of taking me abroad, give me 70,000 in the price or whatever. So does it mean that this TDS obligation will extend to a credit note in value also? So I think there are huge challenges, and I'm sure there are many companies that are impacted by it. So sooner rather than later, clarity will emerge. But I think even whether clarity emerges or not emerges, one big relief that at least I was expecting from this budget was that they have not tinkered with this TDS, TCS rules. We are not a very large company, we are a mid-sized company. It has taken us 2 years to stabilize this whole TDS, TCS process. And it's a nightmare, absolutely. I don't know whether anybody from the government or the authority has ever seen what companies are having to go through. If they did, then they should weigh the cost benefit of these measures, because for us it's a nightmare. I don't know how many people would have spent and burnt midnight oil trying to get compliance. Even though we use ERP, the ERP has no solution, so everything has to be done kind of bespoke. uh, it's an absolute utter mess. And I was very happy that there is no further complication being added till this news came that there is this new googly that has come. Some new section has got added which puts this obligation on companies. I mean, from the government is very nice. It's a very easy way of collecting taxes. But for we are still, we are a mid-sized company. I shudder to think what small companies will be going through. It is anyway. And in the end, I think what will happen, it will increase cost of doing business for companies, because your channel partner is not going to pay for this tax. He will ultimately end up make you pay the tax. So cost of doing business for companies and those who have large sales promotion budgets will certainly go up to this extent.
Sure. Thanks, Sandeep. I think still some level of clarity required in terms of the actual implementation of the new provision. Hopefully, we should get some clarification from the government. Meta, coming to you, you guys have been the backbone in the pandemic period, the entire e-commerce sector. If you look at the current budget, 1,500 crores worth of investment in setting up the digital transaction and digital payment in rural area. Also, extension of BharatNet, under a PPP model for having more internet connectivity in the rural area. How do you think, this will benefit the e-commerce sector on a whole?
Yeah, I think if I look at largely the whole tonality, I mean, leave aside the whole rural impetus, but the tonality of the budget has been towards long-term development and basically growth improvements through infrastructural investments rather than taking shortcut measures. So on one side, I think while there were no short-term benefits to the e-commerce segment in terms of whether there were policies which could immediately give some benefits to the e-commerce segment, or there were basically tax swaps which would increase the basically earnings of the people, immediate earnings of the people, leading to more consumer spends. I think those were those shortcut or short-term benefits were not present. But at the same time, every sphere, what the finance minister announced yesterday was basically how to influence long-term growth, whether it is a 35% increase in infrastructure allocation or infrastructure investments, or the whole rural bit. So on the rural side, now coming specifically on the things that the government announced yesterday, obviously the whole work on connecting the rural India digitally, including impetus on the 5G thing and all of that, and also BharatNet, support on the BharatNet. I think the whole connecting the whole rural India part was one. On the other side, also creating a lot of investments available for logistics infrastructure. So there was a lot of impetus on creating a huge logistic infrastructure, whether it is PM Gati Shakti project or the multimodal logistics park and multiple other projects. I mean, they spoke about whole of road transport, 25,000 crore being there, and then railway, waterway. So they're connecting the whole country, and huge amount of money would be spent there. Now, which means that logistics would become easier and cheaper, and that is the backbone of developing any e-commerce in any country. So if you look at other countries where e-commerce has done well, logistics has been the backbone. So simplifying logistics, making it cheaper, and enabling that through a lot of infrastructure investment, I think that's a very welcome move, and that would not only basically support e-commerce growth in urban areas, it would take it to further rural areas where the real growth would come. 65% of the population still stays in rural areas. So connecting them both digitally through BharatNet and also basically influencing the telecom sector and bettering the telecom sector movement. And on the other side, connecting them through logistics network and making the logistics network better are two very good moves to basically influence e-commerce growth. And at the same time, both Prime Minister in his earlier session with the startups and then Finance Minister yesterday already acknowledged that startups are going to be the growth. They are currently already, they have acknowledged that it is the growth engine and would continue to be the growth engine for the country. So I think that whole thought towards developing infrastructure to basically enable e-commerce into hinterlands is very good. On top of that, I think while I don't see tax benefits for salaried people coming in, which I was expecting a bit, because on one side, I would have expected the tax net to increase by bringing in more and more people into the tax net. But the honest taxpayers, I was expecting at least some reduction on the tax outflow. But then, I mean, that would, like I said, would have been a very shortcut measure or short-term measure. So having said that, I think on the rural side, they have done a lot. So starting from MSP support for wheat and paddy, basically production and all, and to also supporting agriculture through various means. So MSP was obviously a big one, but again, the drone initiative that they spoke about, and there were multiple other initiatives in the budget, which would increase rural income, especially on the agricultural side, which is the prime occupation. So club all these three, connecting digitally and developing the telecom sector, connecting them logistically through developing huge infrastructure, and then increasing the income for agricultural sector people. I think that's a huge impetus on the rural segment, and especially for models like us who are trying to get into Bharat and developing a Bharat e-commerce model and not really an urban metro city model. It is a huge benefit. I think we will benefit a lot. We already are getting into very, very small towns, like towns with population of 20,000 and odd. And we have huge intention this year to get into rural India. And this will be an extremely, a big impetus on our growth.
Sure, madam. Also, since we are speaking of logistics, not from a budget perspective, but there has always been a key concern on the quick commerce now, 10-minute deliveries, especially on the food and beverage side of the business. Your views in terms of, do you think it's sustainable, or it's going to create a lot of stress on the sector, or is, it's just pure competition?
So I think, 10-minute delivery is a niche segment. High income population would need that for some use cases. For the majority of India, paying for services, especially when the per capita income is as low as 1.27 lakhs, paying for 10-minute delivery services is going to be really hard. They will be happy to get that at times and will be very enthused. But ultimately, the unit economics for this, because I know the logistics cost for people who are doing 10-minute deliveries is going to be extremely hard for mass India, because they would not pay. They don't have the incomes to pay. Most of the times they're struggling to make both ends meet. So, but there is a market. There is a very small niche market which might be, let's say, 1% of India's retail in the long term, because as economy also grows, more and more need towards premiumization of services will also be done. The big problem that I see is that multiple players are deploying multi-billion dollars into getting into quick commerce, looking at Western economies basically embracing that. In fact, to my knowledge, even the Western economy models of quick commerce have not started making money, while the propensity to basically spend for that kind of service is much higher there. So my suggestion would be to basically identify a clear leader in this space early on from an ecosystem perspective. Let's say there is an ecosystem of players and investors who are supporting this whole initiative. When there is a small space with profit potential, it is important for the ecosystem to basically identify one or two leaders and just take them forward, rather than having 10 players chase that, because that would lead to a lot of capital deployment which might not be utilized well. I do think that it can become profitable, but in a smaller scale than the larger retail space.
Sure, thanks, madam. Sandeep, just coming to you, if you look at the latest economic survey, India has become a US dollar 3.27 trillion economy. Two suggestions from your side in terms of, what additional steps to be taken to achieve the $5 trillion dream that the PM has.
I think, I think there is enough and more to be done on the area of this whole ease of doing business. While most people find it very nice to say that government has done a lot of things on this front, I think there are miles to go. We are far cry away. And I remember in one of our meetings, we were asked to map. Our board asked us to map as to how many compliances are we required. We are a very, as I said, mid-sized company. Compliances to be done, and the number was in thousands. I think it was 7,000-8,000. And most of these compliances, the default is imprisonment and fine. So I can imagine the plight of the board member who, poor guy, not involved in day-to-day, but at the risk of his personal liberty being compromised. So I think there is miles to be done, if not on the compliance, but certainly on the outcome of non-compliance. The fines can't be that some cop will come and jail you. And second, I think, is about seriously incentivizing manufacturing, because I don't think in a country like India you can give any impetus which is consumption led. It is impossible. to give any consumption-led impetus because it will get frittered away. And I think I was hearing one of the some panel post the budget where one guy said that in uncertain times, if you give, the consumer may pocket it and save it. He may not spend it. So the right way, I think, is the way that the government has done. Really impressed with the approach to the budget. They've not tinkered with what was presented last year. And focus, only thing is the focus has shifted from giving some money to be spent on healthcare or more consumption-led expenditure or revenue expenditure to more capital expenditure, something that creates enduring value for the country. And that certainly augurs well for industry like ours. We are a consumer industry, but look at the measures that the government announced. Big outlay on infrastructure, big help to us because more highways get built, more ports get built, more lighting is needed. Similarly, the focus on affordable housing, very relevant for us. The first thing that a guy in a house needs is a fan and a light. And then the other one on this Jal Nal Yojana about making water available in the villages. Again, very favorable to us because how do you transport water? Either through gravity or through pump. There are no other ways of transporting water, and pump will then be required. So that way, the budget is very progressive. But I think what they need to do is to encourage, and one of the steps that they have done is to extend that fiscal holiday sunset period from March 23 to March 24. So as I said, just two things. Make more incentive, and not necessarily incentives which are around some tax subsidy or something of that sort, but make it convenient for the guy to make in India and remove the burdens of compliance around that. Yeah.
Thanks, Sandeep. Kishan, just in 2 minutes, the latest changes in SEZ facilities, if you can just want to update the participants, that would be critical.
Sure, I think SEZs, has been a long pending ask, with the current status of how all the, almost more than 50% of SEZ spaces are lying vacant, unfortunately. And there has been a lot of exits which have happened for various reasons, primarily because the units did not see any much benefit left after the direct tax benefit has been taken away. And from an operational standpoint, the challenges which the SEZs have been facing, and that is something which the government was very mindful of. There has been a strong representation which has been going around, and this was the first time I think the mention of SEZs came in such a strong way and a positive way in the budget that really probably whatever has happened after that, probably with whatever discussion I've had, I think with the ministries as well as with the SEZ commissionerates, it has been very positively taken. Now, what is really looking at what are the announcements is basically that one important factor which they mentioned is that now there will be a complete rejig of the SEZ regulation, which means there's a new regulation which has already been thought of, and there has been something which is going to happen around that in the near future. Now, automation of SEZ portals, because most of the activities were being done manually, and SEZ in different jurisdictions, the development commissioners and the practices were mostly done manually, which was very cumbersome for the SEZ to comply with. One. Number two, that with the automation and the merger with the customs portal on IceGate, the import activity will completely be streamlined under SEZ, which was a long pending ask, and that has not happened. No conversion had happened between the SEZ portal and the IceGate portal, which was a lot of administrative time being wasted. Now, when we talk about the state's participation, I think that is where the important part of this conversation will be in future. That what will be the state's involvement in a central regime which has been managed centrally by the for the SEZ regulations. Now, if the states get participation and they work together with the central SEZ authorities to really market and get entry into SEZ for the existing infrastructure to be utilized, I think that is what is required. That why can't we welcome players to come into SEZ from the DTA and have a operation, people who are already operating in SEZ get the DT operation merged into that, so that they don't have to logistically look at different locations, different compliances, etc. Both the compliances can be managed within the SEZ for a DT and SEZ. If that can happen, it will be icing on the cake. So I think very positive move in terms of revamping the SEZ law. There are a lot of operational issues, and especially talking about the existing issues like work from home, etc., where clarity was not there, how the benefit will, ultimately unfold to the, the SEZ, units in terms of their authorized operations. I think all these areas have been, there is high time that it was thought of. I think perfect time in terms of thinking of revival of SEZs. And since this, forms backbone of export potential being managed from a already existing infrastructure, I think that would have been probably ideal to do right now and see how we can really open up SEZ back to people to come in and get that benefit. Duty benefits are already available. Duty benefits are now available in the DTA as well, because custom bonded warehouse facility, PLI schemes, etc. are already other additional impetus for exports which are already there. But road depth, for that matter, is already being debated, and soon there will be a recommendation that road depth is extended to SEZ as well. And that is something which automatically means that SEZ thrust will be back very soon, and that's what I'm expecting.
Sure. Thanks, Vijay. Veda, just coming back to you just in 1 minute, one expectation that the e-commerce sector would have from the government way forward.
So I think this will be particularly around simplification of the whole taxes, both direct and indirect tax regime, and also on the FDI regulations. I think these are two areas where all e-commerce companies are struggling a lot. There is a lot of complexity, so simplification is extremely important. Not that there should not be taxation, but then the whole compliances around this and understanding the complexities as to where it would be done, that needs specific attention for simplification.
Thank you. Aditya, you had a point.
Yeah, so I think one of the points which I forgot was, and I think this is the taxation of cryptocurrencies. And I think one of the questions which we have been asked in office as well as otherwise, and which is actually there in the news and everything, is government legalizing the crypto by taxation. But I think what my personal view is that taxing something which is illegal does not make it legal. It only adds to the exchequer. But I think we should not definitely be seeing this as a legality of cryptocurrency by the government, because the legality has to come from the central bank, the RBI, and only those currencies which are issued by RBI will actually be the legal currencies. But government has only tried to lay their hands around the taxation part of it, which they have dealt through this amendment. So I think this point, which I thought will be relevant for the audience, and will help in clarification, because there's a lot of murmur about in terms of that now cryptos are becoming legal in India.
Sure, thank you. So I think there are a few questions. We'll just try. I think Krishan, this is for you in terms of any reduction of GST at resource augmentation services.
So nothing happened as of now. Reducing rates on services is something which is not very a good thing with the government right now. The service sector has already been, has suffered a lot, but at the same time, the push to the sector is by increasing the revenues there, because the contribution of the service sector is increasing. So I would say that, not at this moment, probably we can look at any reductions in the service rates, unless and until the, rate rationalization covers some important services in terms of the sectors which are more critical.
Sure, thanks, Ishan. I think we are in time. There are a few questions. We'll just respond to them individually on emails. But if I look at it in an overall, from a consumer and retail perspective, I think definitely the budget looks positive for the sector, though there may be long-term initiatives which the government has taken, and obviously the sector will see the benefits of it coming over a period of time. But yes, the direction is in, if we look at it from a direction perspective, we are going in the right way, both on the demand side as well as the supply side. Government is trying to make an efficient logistics and a supply chain mechanism, as well as if you look at the demand side, they are trying to increase the income of the farmers, which is the biggest team in the overall population of India. Would like to thank all the participants on behalf of Grant Thornton Bharat. Thanks a lot for your time.